Hey everyone, I'm David McKnight, author of The Power of Zero. Big news out of Washington. President Donald Trump just signed an executive order that could fundamentally change how your 401k works. For the first time, retirement savers may soon be able to invest in private equity, real estate projects, commodities, infrastructure, and even cryptocurrency, all inside their 401k. Sounds cutting edge, right? Well, before you jump in, let's walk through exactly what this order does, what the potential upsides are, and what the risks could be for your retirement nest egg. On August 7th, 2025, President Trump signed an executive order called Democratizing Access to Alternative Assets for 401k Investors. This order instructs the Department of Labor, the SEC, and other financial regulators to make it easier for 401k plans to include alternative assets. That means your retirement plan lineup could someday feature not only stock and bond funds, but also private equity, real estate holdings, infrastructure projects, commodities, and digital assets like Bitcoin. The stated goal is to give everyday Americans access to the same kind of investments that institutions and billionaires have long enjoyed. So let's talk about the potential benefits. For years, most 401k menus have been limited to mutual funds and target date funds. With this order, that menu could broaden dramatically. Alternative assets also don't always move in lockstep with the stock market, so adding real estate, commodities, or infrastructure might smooth out returns during downturns. Historically, private equity has even outperformed public stock markets for big institutions, so in theory, 401k savers could capture some of that upside. And of course, this all comes wrapped in the promise of leveling the playing field between Wall Street and Main Street. Now, let's look at the other side of the coin. Fees in the alternative world can be massive when compared to what you're used to. All-in fees in your 401k can be as low as 0.5% per year, while private equity funds typically charge 2% of assets annually plus 20% of profits. That's a massive drain on your nest egg over time. Liquidity is another problem. With a mutual fund, you can sell and get your money in a day, but private equity funds often lock up capital for 5, 7, or even 10 years. Transparency is also a major issue. Public mutual funds report daily performance. Alternatives don't. You might only see quarterly or annual updates, leaving you in the dark about how your money is actually doing. There's also the complexity factor. Most investors already struggle to pick between large cap, small cap, and international funds. Now imagine trying to evaluate a venture capital fund or crypto product listed on the menu of alternatives within your 401k. Add to that volatility. Crypto prices can swing 20% in a single day. Real estate and commodities can crash, and private equity deals fail all the time. Finally, there's the risk to employers. Companies that sponsor 401ks may not even want to offer these exotic options because if employees lose big, lawsuits could follow. So what does all this mean? Yes, the new order expands the menu of investments you might one day see in your 401k, but more choice doesn't automatically mean better choice. In fact, sometimes more options just create more ways to make expensive mistakes. Here's the broader truth. The most important decision you'll make with your retirement plan isn't whether you own crypto or private equity. It's whether your investments grow tax-deferred or tax-free. Right now, tax rates are historically low thanks to the One Big Beautiful Bill Act, which permanently extended the Trump tax cuts that were supposed to expire in 2026. But with the insane trajectory of our national debt, this is more likely to be a temporary permanent tax cut. Our debt to GDP will be 140% by 2035, 175% by 2040, and 200% by 2043. And once we hit 200% debt to GDP, no combination of raising taxes or reducing spending will prevent the financial collapse of our nation. That's why you may want to consider allocating your 401k contributions to the Roth portion of your account. Pay taxes at historically low tax rates so that by the time tax rates do rise dramatically, you have done all the heavy lifting and can take those dollars out 100% tax-free. So if you find this new menu of investment options is either too risky or too complicated, how should you be allocating your retirement savings within your 401k plan? This one's pretty easy. Low-cost index investing has consistently beaten complex, costlier alternatives over time. The data is clear. Over the long run, the majority of active managers, hedge funds, and private equity deals fail to outperform a plain vanilla index fund. Warren Buffett himself has said that for most people, the smartest play is to buy low-cost index funds and hold them. Combine that with a tax-free strategy, and you've got the ultimate one-two punch. Steady growth and zero tax in retirement. That's the path to true peace of mind. Me personally, I keep 70% of my money in a total U.S. stock market index and 30% in a total international national stock market index. And then I rebalance every time my portfolio gets more than 5% out of whack. So to wrap this up, President Trump's executive order may reshape the investment menu in your 401k, but the fundamentals of retirement success haven't changed. Yes, there may be new exotic options on the table, but the smart money still goes to strategies that are simple, proven, and tax-free. If you want to win the retirement game, focus less on chasing shiny new investments and more on positioning your dollars in tax-free accounts while letting low-cost index funds do the heavy lifting. That way you harness the power of stock market investing while keeping expenses low and shielding yourself from the impact of higher taxes down the road, regardless of what happens in Washington or on Wall Street. If you found this helpful, hit that like button, subscribe, and share this video with a friend who's thinking about retirement. And let me know in the comments, would you put crypto or private equity in your 401k? Thanks for watching. I'll see you on the next video.